Today on this one, I'm catching up with Dr. Simon Collins, Brandon Boucher, and Rob Clarkson, all from Lightning Pay NZ. Many everyday investors, including myself, recognize that Bitcoin is something that can potentially generate a really strong return with a relatively small allocation. That's probably what mainstream finance is in it for. It's number go up technology, something that you can invest in right alongside shares, bonds, anything you like. Over time though, and I don't know if this is true for everyone, but it's certainly true for me, it's about storing a portion of our analog wealth from today in a digital format so that in the future, when things are probably more digital, we have a form of wealth which we acquired at a relatively low price. So from treating it as a speculative number go up bet to a form of savings, it's time to take another step to actually treat it as a medium of exchange. The digital payments market is estimated to be worth $20 trillion by 2025. Can Bitcoin, originally designed as a peer-to-peer cash system, actually disrupt these sleeping giants, or dare I say it, even destroy it? Let me know what you think in the comments. This is going to be a really good discussion today. If you are into Bitcoin, but you know that there's probably something more to it, this is definitely part of the story. Hope you enjoy. Let's get started. Welcome to the Everyday Investor Podcast. I'm your host, Darcy Ungaro. This show is all about helping everyday people like you build new wealth for the new world. Here, it's a dash of personal finance, a dose of mainstream wisdom, and a drench of what the future may bring. Just a couple of quick notes. While I'm a qualified financial advisor, this isn't personalized financial advice. Please research things thoroughly before taking action, and if possible, seek advice you have to pay for. Next, I'd like to thank all of my past, present, and future guests for sharing their wisdom and insights on this platform. Last but not least, a special shout out goes to our show partners, You Grow Wealth for personalized financial advice, Gorilla Technologies for strategic IT solutions, and Icehouse Ventures for access to some of New Zealand's best tech startups. Check out the show notes for referral codes, special offers, newsletter signups, and ways to connect. Thanks for joining me on this one. Let's make a start. All right. Welcome, everybody, to the Everyday Investor Podcast. Today, I'm catching up with co-founders. All three of you are co-founders of Lightning Pay NZ. So one of the criticisms aimed at Bitcoin over the years has always been that it kind of has failed in terms of being money because no one actually uses it. And whether that criticism is valid or not is probably beyond the scope of today. But the fact that you guys are solving for that and making some good progress in the process says something. So can you tell us a little bit about what the Lightning Network is firstly? Because a lot of people might have some awareness of what Bitcoin is, but what the heck is the Lightning Network?
Yeah, so the Bitcoin network itself, the base chain, as we call it, or on-chain, works really well for payments that are sort of a higher value and also don't require instant settlement. Because typically transactions take around 10 minutes or longer to confirm, depending on how much you spend on the fee when you make the payment. And so the Lightning Network emerged as a way not only of scaling Bitcoin, because there's an issue with the scaling on the base chain is that currently only 7 transactions sort of a second are possible, and that's probably not enough to scale to global standards. And so what we needed was something that enabled fast and cheap payments and able to Bitcoin to scale to global proportions. And while the Lightning Network still isn't quite there, it's definitely the best tool we have for the job at the moment. So typically, Lightning Network payments cost fractions of a cent to send and are typically instantaneously confirming. And so they're ideal for your day-to-day purchases, your coffees, your groceries, your fuel. And that's how the Lightning Network came about.
Cool. Is it kind of like saying, hey, your nice classic car that you keep under wraps most of the time, that you take out rarely on the weekends on a nice sunny day, that's your Bitcoin, whereas the Lightning Network, that's kind of like using the much cheaper, high-speed public train.
Bitcoin is like using the international payments facility at your bank, which is something you probably don't do every day. You probably do it for larger transactions because you're not sending US dollars overseas willy-nilly. You're doing it for a reason. It's usually to settle something significant or pay a large bill or to transfer money for foreign exchange reasons, whether you're hedging or sending money back, because it's relatively expensive. It's going to take a couple of days to arrive. Whereas the Lightning payment is a bit like your EFTPOS card. You go down to the shop, buy yourself some milk and maybe a Mora bar, and you pay instantly and forget about it. So that's sort of those, and those, to be fair, are kind of the use cases for both of those, what we call layers. The Bitcoin base chain layer is emerging as a global settlement layer for money. I would push back firmly against the idea that Bitcoin has failed. There's an argument to say that it can't really fail because really it's just software, and people use software for what they're trying to, complete as a task. So the fact that it hasn't emerged as global money overnight or disrupted all money in its 15-year history can't necessarily mean that it's failed. So, the Bitcoin base layer is for people who are going to send, if we denominate it in dollars, tens of thousands of dollars or even billions of dollars. We see this regularly on the Bitcoin base layer. Someone will move $1 billion worth of Bitcoin for $1.50. What an incredible service to have access to with no intermediaries, with extremely low cost and extremely high security. But we don't need to move $1 billion every day. We sometimes just need to spend $50, or we need to go to the pizza shop across the road from Rob's work and buy a pizza for Bitcoin. And we can do that instantly without the kind of faff and the expense of the base chain on Lightning, because it sits on top of the base chain and it runs parallel to it as a separate system that just occasionally checks in to the base chain to make sure all the money's where it's supposed to be.
Okay, so you kind of answered my next question, but I'll throw the question out there anyway,
Sure.
Because again, like for those that are familiar roughly with how blockchain-based crypto works or how Bitcoin works in particular, then that's kind of enough for a lot of people just to get their head around. But we're talking a next layer up, another abstraction on top of that. So can you just fill in some of the blanks around what is actually happening? We're talking about, I've heard this described by Andreas Antonopoulos as like you set up a bar tab. I don't know if there's a better analogy for you guys to use, but what is actually happening in layer 2 and layer 1? Like how do they kind of reconcile between each other?
The easiest way to think about it is that the Lightning Network is a protocol for batch payments. So, as the two other guys described, the base layer is, the very low level settlement network where we're, making final settlements on a global basis in an open protocol, right? And the Lightning Network, essentially what it's doing is between two parties, we are making a single transaction that then between the two of us, where we agree on an amount that we own between us. So we both owe, maybe there's a transaction where there's, 0.1 Bitcoin. I might own, the whole 0.1 when that starts. And then what we do is we essentially trade agreements. We trade agreements that essentially say, okay, now, you own, 0.01 Bitcoin, and I own 0.09. And we continue to do that, and we make updated agreements. So essentially the way that it works is that we have these agreements, and these agreements are real Bitcoin transactions, except for that we don't broadcast them to the network and make them final. We don't settle them on chain on the settlement layer. So the real, that analogy of having a bar tab and just, agreeing that you owe a certain amount over and over again is apt. However, it's important to note that at any time, the owner of that bar can take that bar tab and just put it on chain and make that a final settlement. So that's essentially the way that it works. So I can go to that bar every day. That's probably not healthy, but I guess for the analogy, that's what we'll use. I can go to that bar every day and I can update that tab. I can pay a little bit off and I can receive some of that tab back. And we can do that over and over again for as long as the two of us are happy that this agreement is going to be valid, right? So on a basic level, that is how it works. However, on an extension from that, if we want to say how the Lightning Network actually works, is that we have, millions of bar tabs. The bar owner has a tab with his suppliers and is doing the same thing. When I pay the bar, he can pay his supplier directly. And we can pass these agreements back and forth. So at a basic level, what we're doing is we're connecting, these agreements on Bitcoin transactions between different parties in the network, and we can pass them to each other instantly. So that allows me to not just pay the bar. I can pay the bar supplier directly if I wanted to do that. And I can do it through the bar owner. And we can do it instantly. We can do it finally settled instantly, which makes Bitcoin, the network, a lot more like a cash transaction. It's instant, it's final, it's irrevocable. And on top of that, it's open, which means that a company like ours can build on top of this and create financial services that takes advantage of that transaction network, the open network that is finally settled instantly anywhere in the world, and it has a significant amount of advantages as a payments network.
That's cool.
Another thing that the base layer of Bitcoin gets a bit of guff for, especially from other cryptocurrency enthusiasts, shall we say, is that it's not necessarily very smart. Whereas Lightning introduces the smart bit of smart transactions and smart contracts to Bitcoin. So now we have native smart enabled transactions on Bitcoin, so that again, a company like ours can innovate on top of what money is and does to create these interesting kind of next generation services. You could, as a customer, pay the supplier of your local cafe directly. So there's a future in which when you buy a coffee, you pay with one transaction, but that transaction gets split between the milk supplier, the coffee supplier, the landlord, the staff, and then the profit for the cafe owner, all in one transaction. And so there's no such thing as a outstanding invoice. All of these kinds of things could be built on top of Lightning because it's smart, allows that programmability, but allows that hyper networked kind of interface with everybody who's got a wallet and a connection to the Lightning network.
I guess a lot of cryptocurrencies out there, right? And there's going to be a lot of them that were probably initiated and they set out to solve the so-called problem that Bitcoin has, in that the scaling issue, it wasn't scaling, or I guess transaction speed, 7 transactions per second, not fast enough for, when you're competing with the likes of Visa. So you had all these other competitors popping up in the crypto sphere. But is the Lightning Network kind of like the answer to all of that, so that, hey, you really don't need any of this other stuff because you can build the smart contracts, you can build all the functionality within the Lightning Network protocol now? Is that correct?
Yeah, I'd say so. I think what we've seen is a lot of cryptocurrencies crop up for exactly that reason, that we can solve these problems. And generally what we're seeing is the way they solve it is by adding some level of centralization. Now that is a big no-no, because the whole point of this, Bitcoin's key sort of benefit is its decentralization. And if you start making trade-offs with centralization, okay, you can increase your speed and you can probably increase your throughput, but at some point, and it's pretty soon after, you don't become much better than Visa or MasterCard, because they're the ultimate in centralization, basically. So what Bitcoin has done is it's added the Lightning Network as a scaling solution without sacrificing any level of centralization. The Lightning Network itself is a protocol. So that's the key distinction here. And people, because it's a difficult thing to do, in the early days, we had a lot of failed transactions, a lot of problems with it, some bugs like you would do in any early software. But people turn around and said, well, it's failed. But what they haven't seen now is how well it's progressed over the past few years. It was initially started in 2016 was when the white paper came out for the Lightning Network. And since then, it's just been on a growth trajectory. And we now see very rarely payments fail. And it's just the case that it's working, and we're able to build a business on it. So if that isn't proof, I don't know what.
Not only do we have this inexpensive instant, transaction layer on Bitcoin, we also have one that anyone can build on. Like the three of us, the way we've built this business, attempted to do it, over the Visa network. We simply wouldn't be able to. Whether it's the permission required, whether it's the capital constraints, whether it's the, we simply wouldn't be able to do what we've been doing if we were trying to use some of the legacy systems. We can do this, and so can anyone else who might want to build. We're not so arrogant to believe that we're going to solve every payments problem here in New Zealand, but other companies, other individuals, other businesses can. And we can all work together in an interoperable way, which means that they can work with our customers and vice versa. And that's unique. It doesn't exist anywhere else.
When we launched the Lightning Pay Exchange, which was, is kind of the flagship product that we have in market at the moment, day one of the well-known Bitcoiners that we from New Zealand that we know well has a great relationship and works a lot in Brazil. He said, "Can I have access to an API for the exchange?" And he built himself a foreign exchange corridor on the Lightning network between New Zealand and Brazil. And so, he built his own service on top of our service on top of Lightning on day one, and it didn't affect our business in any negative way. In fact, it brought us volume, which is fantastic. But he built himself something that couldn't exist otherwise on top of something that we'd built. And, that's the kind of thing that this enables, is stacked businesses, highly integrated businesses, or businesses that just utilize this open source infrastructure in a way that you would have no ability to do using, as Brandon says, legacy systems.
And the cool thing that I'm picking up, not just with what you guys are telling me about, but just in Bitcoin in general, is that how things start out isn't always how things finish off. And like what you were saying before, Simon, how somebody else could just take what you had and effectively plug in a foreign exchange component to it and off you go, right? And you're not, that development or that improvement doesn't come at your expense. And that's the cool thing with Bitcoin, is that it shows us what it is over time. And I think anybody involved in the Bitcoin business will probably appreciate that you might start out trying to do a certain aspect of business within the Bitcoin ecosystem, but it will change over time and show you what your business is. That's just the power of discovering something like this, which I think is cool. And we'll touch on that as we go through this. But I just want to kind of keep on going with this and make sure that I understand how this works. And maybe if you can just explain it to me with the pizza shop across the road from you guys. If you did buy a pizza there and you were using the Lightning network to transact on, can you just explain to me what's happening from the user's perspective, but also from the shopkeeper's perspective? And by user, I mean like somebody who doesn't really know a lot about the technology, but they've downloaded what they need to and they're using it.
Yeah, the person who wants to pay would have downloaded an app onto their wallet, which would be a Bitcoin Lightning wallet, and that would allow them to store some Bitcoin with access to it on their phone. And so they would go into the pizza shop, and the pizza shop owner would be running either our Lightning Pay terminal or their own wallet app on their own phone, and they would dial in an amount in New Zealand dollars for the amount of pizzas that the person bought. And once they'd hit charge, that would create a Lightning Network invoice, which is for a specific amount of Bitcoin that is then shown to the user. These invoices can have an expiry on them. The expiry can be pretty short. It can be a minute. It could be 10 seconds, could be 3 days. The payer would scan that QR code with their Bitcoin Lightning wallet, and they would then be shown the amount of Bitcoin in the app. And if they're happy with that, they press send, and that would then instruct their wallet to pay the shopkeeper's wallet. If the shopkeeper's using Lightning Pay's POS system, then the shopkeeper can predefine how much Bitcoin they get and how much New Zealand dollars they get. And so typically it could be 100% converted to New Zealand dollars, and that's fine. Or they could opt, only to convert 50% or whatever they choose. And so in that case, they would receive the remainder of the Bitcoin, and then the New Zealand dollars would be dropped in their account by the latest next business day.
So you can see I've got a $5 invoice there, and I'm going to hit charge.
That's a lot, but you're worth it.
Yeah, absolutely. So this is what our vendor would produce for somebody who's paying
now,
and that's paid.
Just like that.
Paid invoice. Just like that.
Like that was less than probably 3 seconds.
Oh yeah, 100%. I mean, and then I go, okay, next invoice, and I'm on to the next transaction. And this is what I mean. I mean, we can do this over a camera. We don't even need the physical card or your phone to be next to the terminal. We can do this remotely. And so the other benefit, of course, is that Bitcoin that Rob just sent me is now spendable. I can turn it, if I'm a pizza shop and my cheese supplier has just shown up, I can turn around and I can pay him or her or them with the money that Rob just sent me. Whereas with traditional payment systems, you'll wait 2, 3, 4, up to 10 days for settlement of all of your combined transactions.
Okay. Wow. I'm just already thinking about all like the multiple things that you can do with that, like setting up different payments for multiple different things, like you said before, Simon. So you're paying the cheese guy, you're paying the lease payments, maybe 15% is carved off and just sent into a Bitcoin wallet just to hodl. But the rest of it is just running the business. But instead of having a bank account that you look into once a day or once a week, it's just happening. You've coded it in. So you can just get on with the job of creating some really good pieces, right? That's it. It's cool.
That's it. Absolutely. Yep. And your suppliers don't worry about when they're getting their funds. They don't have to worry about their own time between settlement. I mean, you think about how much productivity is lost and how the velocity of money has an artificial cap on it in New Zealand by 2, 3, 4, 5, 10-day settlement times for every single link in the chain of getting funds from the retailer to suppliers to wholesalers to processors to manufacturers to, the raw material. Imagine a world where the velocity of money is a value of 1 rather than a value of 0.1.
Yeah, but there's more to it than that. Like speed, but you're also like, if the average business in New Zealand is spending, say, $15,000 a year in merchant fees, you're immediately releasing most of that back into the economy, and then you're speeding it up. So how's that for a strategy to get out of an economic slump if there ever was one, right?
And I was going to say, for a lot of small businesses, that 2%, falling straight to the bottom line is, for small businesses, for a cafe, that's going to be, 20, 30% on top of the profit margin, right?
That's right.
Exactly. Because margins are so slim, right? And then let's not forget about the competitive decision that you're making to either absorb or pass on that fee. Because when you show up to a shop and you see the sign that says, there's a 2.5% surcharge on that transaction, as a customer, do you go, well, I know the guy down the road doesn't charge that.
Yeah.
Now, that guy down the road has chosen to absorb that and build it into the margin of their product. But you're making a decision as to whether to signal to your customers that, they are paying or secretly really are also paying those transaction fees. So, there's a huge number of benefits from releasing that stored capital or absorbed capital to people who own their own businesses.
Yeah. Like these traditional payment providers, they're basically unelected gatekeepers, rent seekers that are just extracting without necessarily providing anything that's novel. Now that the other alternative technology well and truly exists to be able to transact without them, they probably can't innovate to a place where they could keep up. Like they can reduce their fees perhaps a little bit, but what are you expecting is going to happen here?
They genuinely can't. They cannot reduce those fees because that 2.5% is not all going to Visa. There is probably 5 to 7, depending on the system that you're using, intermediaries in the system between the point of sale operator, the company that provides you your point of sale machine, your POS, the interchanges, the intermediaries, the schemes, and then the processors all take a percentage. And this is why, the previous government legislated around interchange fees for New Zealand payments to try and bring the cost of these payments down. They brought the cost of an average transaction down by 0.2% because the one thing that they were able to legislate was the interchange fee. They brought the interchange fee to a maximum of 0.4% from memory. But again, that's only one link in the chain. And so actually the 2.5% is spread across a bunch of businesses. You're going to have to convince all of them to drop their fee to be able to compete with a free open source solution. I don't see that happening.
No, definitely not.
If interchange is your business and you're being asked to reduce your profit, what are you going to do?
Yeah.
Say, no, thanks.
That's right. So what is the biggest barrier then in getting more and more businesses to adopt this? Like how would you pitch this as a new innovative payment platform for, say, a cafe, a pizza shop, clothing retailer, something like that?
It's about having Bitcoiners show up with Bitcoin to spend. Bitcoiners are furious savers. They hodl, as we all know, and we love them for it. I am one myself. But at the end of the day, Bitcoin succeeds as a store of value, but it wins as a medium of exchange. And so when we build a flourishing ecosystem of people who both spend and receive Bitcoin, that's when a system like this can reach critical mass. And so for us, as I was saying earlier, the kind of core of our product is our Bitcoin Lightning Exchange, which uses open banking and the Lightning Network to create extremely, extremely fast transitions between, the old financial system, the fiat system, and the Bitcoin system, so that we do have a critical mass of New Zealanders who have Lightning Bitcoin to spend because they've got it in a Lightning wallet. And they may be passing it to, on-chain for cold storage as well, but they've got a balance of Lightning Bitcoin that they could spend at a retailer as well.
Okay. Anybody want to add anything to that one?
More specifically, how do we sell it to merchants? Is we'd say, look, you've got an additional payment rail that when you start with Lightning Pay, it doesn't cost anything to set up, anything to use on an ongoing basis, and has a way cheaper transaction fee than what you have to start with. You're not under any illusions. There's not going to be many people using it to start with, but like Simon said, a dedicated, passionate user base of people who, and growing passionate user base who are keen to support local Bitcoin accepting merchants. You also go onto a global merchant map called the BTC map, which basically for any Bitcoin who travels internationally, and we know, that's a key thing about New Zealand is we get lots of international travelers. They can see all the merchants who accept Bitcoin. I met personally with a Canadian guy who came over, and he traveled through New Zealand from Auckland down, driving with his partner and visiting every Bitcoin merchant on the way through. Basically, it's quite a heartwarming story. And I met up with him for a coffee in a cafe nearby that accepts Bitcoin, just because he was a Bitcoiner in the area and he got in touch. So that's the kind of user base you're sort of looking at. And so it's like it's kind of a good way of adding another payment system that can be there should you need it. And like I say,
okay. Bitcoin is amazing in terms of number go up technology. But what about Bitcoin as a savings technology or even as a medium of exchange? Now, I don't think anyone knows with certainty exactly what the future value or even use case of Bitcoin will be. But if you want to own some just in case it catches on, then take this free online course that I created in partnership with Easy Crypto. Sign up to Crypto 101, Crypto with Confidence now. Link is in the notes. Let's get back to the show.
The main thing outside of the cheaper payments and instant settlement is the fact that we have both sides of this economy growing, right? We are, as a business, we are focused on both, how do we develop merchant services to allow people to accept Bitcoin this way, but also, how do we increase the number of people that are saving their value in Bitcoin, and ultimately, when you're saving your value in Bitcoin, you're going to have to eventually turn around and deploy that value into the world somehow, right? And so, by building both sides of this and thinking about how we can develop both the people who want to accept Bitcoin and the people who want to save in it, ultimately that economy grows, organically as we develop both sides and services for both.
Yeah, I think we've probably all had experiences with innovative payments or loyalty point schemes, but these are centralized enterprises in and of themselves, which then cause you to think, well, the success of this is going to be dependent on how well you do it, how much you spend on marketing, all the rest of it. Here we're talking about a decentralized open protocol that is gaining worldwide adoption anyway. So it kind of feels like this time maybe it's real. This time maybe we can break free from the fiat system a little bit more. But like going back to pitching businesses and just getting them on board, kind of understand that if your business was listed in a directory, for example, that accepted Bitcoin, that's definitely going to be helpful for the business. I kind of understand how people who get it will start using it. But for the everyday pleb who does not get it, who does not understand it, what is the barrier acting there? Like, why wouldn't my mother-in-law, for example, download a Lightning wallet and start transacting using this? Is this beyond the reach just because of the user experience still? Or is this something that everyday people should actually be using now as well?
On the Lightning network side of things, the UX is really good in a lot of cases. Really good in that, like, it might be only slightly unfamiliar, but for the most part, there's a lot of great wallet experiences out there. I don't think that that's the key barrier. I think the key barrier is, and this is ultimately what we're designing our business around, is developing the knowledge and the understanding of what it is that Bitcoin actually is and what we're doing here, right? I think a lot of people that I talk to, whether it's family or friends that only have a cursory knowledge about what Bitcoin is, they think about it like it's a stock that you buy that you hope that is going to make you rich in 24 hours or something, right? Like that's ultimately the box that it's in. And I think a lot of the industry is designed around that image of what Bitcoin is because then you go there and you're getting pitched these other things that might make you richer faster. And, it doesn't really, that's not what Bitcoin is meant to be. Bitcoin is meant to be money in the broadest sense, right? And I think we're getting to a place where it's being recognized as a store of value, and a lot of things have happened over the last year that have demonstrated that acceptance is occurring. But the idea of Bitcoin as money, people have ideas that we talked about earlier. The idea that Bitcoin has failed as a medium of exchange is just a reflection of the fact that, this open protocol needs to be built out. This circular economy needs to be built out, and we need to create it and deploy it into the world. So ultimately, I think the biggest barrier to the success of, Bitcoin and the Lightning Network as a medium of exchange in New Zealand is ultimately just showing people what it is. That it's actually money that you can use every day if you want to. Having people try it, downloading a Lightning wallet, topping it up with $10 and going out and finding a coffee to buy. Like that's, and just seeing it for themselves is the main barrier because, that image of Bitcoin as, a speculative investment only is ultimately the barrier that needs to be broken. And showing people what can be done is the biggest thing, I think.
So we alluded to this before, Simon, but you set out to build this network and ideally disrupt the payment systems here in New Zealand. But along the way, you discovered that you'd actually built something pretty cool. So do you want to just tell us a little bit about that?
Yes, we went out to solve for merchant services, right? And that's a long and hard road to sign up a whole lot of merchants. But what we wanted to do was to offer merchants the option to receive, obviously, Bitcoin and to receive that instant settled Lightning Bitcoin. But also if they wanted dollars, that's totally fine too. Everybody's got bills to pay and their bills are often denominated in dollars. And so we built an exchange which would flip that Bitcoin into dollars if that's what the user or the merchant required. In doing so and building that kind of back-end exchange system, we realized that we had built the best exchange anybody's ever used. And we did that by linking bank accounts using open banking and the Lightning Network as an exchange. So we've got extremely fast and instant payments from the banking system, and we've got extremely fast and instant payments on the Lightning Network. So we've bridged the two most efficient and futuristic or kind of next generation financial protocols together in a single exchange. And so instead of setting up an order on a Bitcoin exchange, logging into your bank account, setting up a transfer to the exchange, waiting for it to arrive, they then transact your Bitcoin or cryptocurrency, then they send it to your wallet in a process that takes half a day or even longer at some points. We can do that in like 10 to 15 seconds from your bank account into spendable Lightning Bitcoin. And again, the best thing to do really is just to show you, right? So here's our Lightning exchange. This is lightningpay.nz. I've got $10 programmed in here. And so I'm going to just set the address that I want it sent to. I have a wallet of Satoshi address that I use. And I'm going to send it from mine and my wife's account. It's checking and pulling the balance from my bank account. And then it's going to send me some Lightning Bitcoin in a moment. And what will happen is you'll see at the top of my screen, I'll also get a notification from Wallet of Satoshi that I've got Lightning Bitcoin in my Wallet of Satoshi account.
Yeah.
So that's paid. And if we come over here to my Wallet of Satoshi app, which is what I use because a lot of our users use that, you can see it says a few seconds ago I received that Bitcoin. I can send that now. I can send it back to Rob, who I owe $10 to from earlier.
Yeah, from the pizza for breakfast. Yeah,
Exactly.
so it's kind of all starting, like all these puzzle pieces are starting to come together now. And I guess in the back of my mind, like I grew up in the late 70s, early 80s, where we used VHS tapes, and then we had these Sony Betamax videotapes, different language for you young fellas. But it was really clear that the Betamax put out by Sony was actually a better, superior medium to use. But it didn't make it. The VHS tape caught on. It got the critical network size, I guess, and it just perpetually kept on growing. Do you see that competitors like, say, Ripple or even other things will come along, will even banks come along saying, hey, we're not going to take this lying down. We're going to buy you, and then we're going to shut you down. What do you see happening in terms of threats coming up?
Yeah, I mean, they're definitely going to try. And I think what's important for us, and the reason we're building on Bitcoin in the first place, is that, you know, we're building on what we think is the best version of money. It comes, you know, for us anyway, it comes first principles down to that. You know, there ultimately, you know, we were talking earlier about the base layer and the payments layer and difference between the two. I think ultimately, you know, the whole network effect that Bitcoin has started to capture and will continue to capture is down at the foundational level, that it's the best money. So right now we were talking earlier about people recognizing it as a valuable savings technology, and that emerging as something that's more and more accepted and you know, obvious every day. Building on top of that protocol is the obvious thing to do. You know, in a lot of cases, the competitors are built on something that, as Rob was talking about, is compromised in some way. And we all know that the foundational argument for why Bitcoin is ultimately surrounding the fact that Bitcoin is better money than, you know, the money we have in the traditional fiat system, right? And ultimately, down the road, you know, 5 years, 10 years from now, as we go along, if we have, you know, a better money competing with an inferior money over and over again, you know, people are going to want the better money. And over time, that network effect of people wanting the better money will continue to drive that forward into the places that it needs to go over time as these things are being built out. So ultimately, like from our perspective at Lightning Pay, the key thing is that the best money in the world is going to capture the network effect that ultimately carries it forward into, you know, every conceivable use case that gets built for it. There will always be competitors, and there will be people that claim they have something better, or, you know, there are going to be governments that launch CBDCs. There are going to be, you know, there are going to be fiat currencies for quite a while longer that your governments are going to put out as well. But the inefficiencies or deficiencies of those systems, whether it's centralization, you know, compromises that have been made in other cryptocurrency systems, or it's the problems that we already know about with the existing money that we have and use today, you know, those deficiencies as money ultimately are going to be the thing that allow Bitcoin to continue to succeed and you know, capture the advantage that it has going forward.
Just to add to what Brandon is saying there, you know, obviously, particularly today, we're seeing obviously some sort of play from Ripple to capture a little bit of government attention. We're seeing, you know, a lot of discussion about why cryptocurrency should be included in SBRs and all that sort of stuff. But the reality is asking that question of why Bitcoin is better money is what answers that question for us. Why is Bitcoin better money than Ripple? Well, because Ripple can just print a bunch more Ripple when they want to print more Ripple. And that's awful for the users of Ripple because it diminishes the value of the Ripple that you're holding. It's the same with any other cryptocurrency. There's a foundation or a VC-backed firm who are sitting at the top and saying, well, I feel like we deserve more tokens. And eventually the temptation to print themselves more tokens is too much for anybody with stakeholders to withstand. We see this with, you know, and there's a great video out from Joe Stats vs. Fiat over the last couple of weeks talking about the difference between, you know, pushing the big red button and printing yourself more tokens or or staying in a decentralized and deflationary system. And so that's why we're building on Bitcoin, because the other thing is we can bring everything that's great about financial networks and smart contracts and all of those things that have emerged in the space back to Bitcoin, and we can do that in a system that's equitable, democratic, and ultimately can't be debased or undermined by its owners or its administrators.
Cool. Like, I'm just thinking here from a business owner who doesn't operate a cafe or a pizza shop or things that are selling for high frequency, low value sales. I'll sell lower frequency but much higher value sales in the form of the fees that I'll be charging my clients, which will be somewhere between, say, $800 to like $3,000 or $4,000. And I just wonder, like, if I'm thinking about plumbers, electrician, or any tradesman, really anybody selling slightly higher ticket items, is the Lightning Network going to be a suitable payment system for them? Or is there a limitation, or is there a point where you just go, no, stick with fiat for now, or use the base layer of Bitcoin?
Yeah, you're right. There's a point at which using the base layer makes sense. As it is at the moment, the Lightning Network can carry 10,000 New Zealand dollars without a problem. So a transaction like that would go through. But the question is, at that point, you might be thinking, well, what am I going to do with $10,000? Do I want it sitting sort of in my wallet on my phone? It's not a good idea. You'd have it in your storage solution, and the best storage solution we have is these hardware wallets. They look like a little USB stick. You plug them in, and then they generate a unique sort of key, and then the funds they're not essentially held on there for all intents and purposes, but the funds can be moved with this device, which has this secret backup. So for a higher value transaction, an on-chain transaction makes a lot more sense, but not only because it doesn't matter so much with the fee. You might be paying an on-chain fee of somewhere between $1 to $50, depending on how busy the network is. At the moment, it's about $1 for an on-chain transaction. So not that much. So you wouldn't worry about it. And the best place to keep something like $10,000 or above would be in a hardware wallet. So that's why you'd probably do it on-chain.
And is it possible to set up things where if someone pays your invoice on the Lightning Network, I think this is based on what you guys said before, say 50% of it goes into fiat currency right away, straight into your bank account. The other 50% goes to your Ledger or your Trezor hardware wallet. Basically, that's your cold storage solution. Is that possible to kind of program and set up by default where that automatically is happening?
It is, in a way. It's not a service that we provide for automatic payments to on-chain, because the Lightning Network is built specifically and designed well for doing things like that. If it was a requirement, it would be something we'd look into, and we'd build that kind of a system. At the moment, because it might not be clear how much payment you're getting through for small chunks, the best way to receive it is the Lightning Network. And so you can receive that using our system on the Lightning Network. And then at the point at which you have a big enough amount in your Lightning Network, say anywhere from 1,000 New Zealand dollars upwards, you would then transfer that as like in that batch to your cold storage, and then that would be the best way of managing.
Like a bank account, really, right? You always have a certain amount of float in your normal transactional bank account, but then you might have a surplus where you send that off. In this context, the surplus could be your hardware wallet. So you would do that in batches when you get beyond a certain amount. And is there any technical difficulties, higher fees, or other drawbacks associated with holding your Bitcoin in a Lightning wallet and sending it over like irregularly to another wallet? Is that actually either dangerous or expensive to do that?
There is a risk involved. So when you receive on Lightning, you have what's essentially called a hot wallet, because the wallet itself has to be connected to be online. So your cold storage in your device is actually it's like a cold wallet. It's not connected to the internet. There's no way it can be online. So while the funds are in a wallet, they can be transferred very quickly. And so the risk is minimal, because we've had funds in our Lightning wallet for the longest time, like years now, and it never had a problem. But they're at more risk than if they were in your cold storage hardware is the best.
If somebody stole your phone, they could potentially access your wallet, right? It's like having your wallet stolen with cash in it. It's the same kind of concept. What I was going to say about it being advantageous about moving from Lightning to on-chain infrequently is that there's a idea on the base chain or an issue on the base chain called what are called UTXOs, which is that when you receive an on-chain transaction, even if you're adding more and more Bitcoin to the very same wallet, and you're getting a combined Bitcoin balance that's going up and up, you're incurring what are called UTXOs, unspent transaction outputs. Each transaction is its own unspent transaction output. And when you go to move all of that Bitcoin, even if you've stacked $100 worth of Bitcoin a week for years and years and years, and you finally got to one Bitcoin, when you move that, you're not moving one Bitcoin, you're moving years and years and years of $100 transactions or $100 dollar denominated transactions. What you can do with Lightning Network to avoid that is when you stack in Lightning and move your Bitcoin to the chain once you've got a bigger amount, let's say $1,000 rather than 10, you've incurred 1/10 the number of UTXOs, so you incur a much smaller fee when you go to move that Bitcoin eventually. And so this is something that, again, resonates a lot with our users of the exchange, is that they're stacking on Lightning and then sending to cold storage at much lower costs.
Yeah.
From a fees perspective, but also they don't incur those fees down the road from unspent transaction outputs.
Yes. Maybe I've misunderstood it, but just tell me if this is kind of correct. Like, if we think about UTXOs as just different denominations of currency, right, that stay in that format, I guess if you're moving it from a Lightning wallet into layer one, you have an opportunity to reformat the denomination. Is that one way of looking at it?
The analogy you used is the right one, right? So, each transaction on the base layer is individual pieces of Bitcoin that land in your wallet, right? Each one of those are UTXOs. When you go to make a transaction to spend those, every single one of those, what your wallet's going to do is select enough of those to spend to hit the balance you want to move. So you might be spending 6 UTXOs, you might be spending 2. But ultimately, each one of those UTXOs incurs is as how the fee is calculated when you're moving things on chain. So the analogy that I like to use is just cash in your wallet. So if you've been accepting those, $1 notes over and over and over again, you're going to have a wallet full of $1 notes if you've been doing it for a year, and going to spend that for if you want to spend $1,000, you're going to have to count out, $1,000 in $1 notes, and that's going to take you time. It's going to incur you a cost, right? Very similar analogy is the way the Bitcoin works. Is if you have many small UTXOs, the cost of actually moving those is related to how many UTXOs you have to move to make that transaction. So, by using the Lightning Network, we can manage the way that we create UTXOs. We can use the Lightning Network as our day-to-day spending wallet. That's where most of our transactions, in the long run, that's where most of our transactions are going to occur. We don't think 5 years or 10 years from now, many people will be using on-chain Bitcoin every day. Most people will be using something like the Lightning Network, because that's where it makes sense to have frequent transactions, and that Bitcoin network, the on-chain network, ultimately becomes where you store larger amounts of savings, and you do so in larger amounts.
Yeah, I get it. So
Term deposit, it's like a term deposit and your everyday account. You're gonna touch one infrequently, you're gonna use this one every day. And the Lightning Network is the one you'll use every day.
Okay. So yeah, your transactional account, your savings account, your term deposit, but you're touching on something else that I want to talk to you guys about. And it's probably, I guess, maybe it's a bit more of a philosophical one connected to the reason why people invest. And I've tried to explain this to people without sounding like an absolute crazy person. And it's really hard not to sound crazy when you tell people about this, but we shouldn't be living in a world where we're forced to invest, right? Because some people shouldn't be investing because it makes them too nervous. Maybe they don't have enough money to get through, and they really shouldn't be gambling. They should just actually be able to store their own human time and energy that they worked hard for, and they should have the ability and the right to be able to spend it on their terms when they want to without any penalty. But unfortunately, because of the fiat financial system that we live in, our money leaks value daily. So we're forced to make this decision where we have to invest. And unfortunately, it comes at the cost of occasionally losing value because of a drawdown in the share market. And we're due for one. We're always due for a drawdown. And it just seems so unjust that everyday people are forced to invest with their money just to preserve its value. And what I love about Bitcoin, and I know this is going to really annoy a lot of the maxis out there, but what I love about precious metals as well is that we have an analog and a digital version of savings technology, which will offset the impacts of inflation over time, or it has done so far. So, like, what are your thoughts? Do you have any thoughts on that topic? Do you think that, I guess, what's happening with the Lightning Network, where we're actually able to use Bitcoin now rather than just hold it, is this a step towards having a more appropriate relationship with money?
Yeah, I mean, absolutely. I mean, you're speaking my language as far as the reason why this matters, right? That tragedy that we're forced to invest is something that ultimately is what we're trying to solve here. The taking it even a couple of steps further, we work, most of us, working 9-to-5 jobs every day, trying to get some income, have less expenses than our income so that we can save over time. That's the job most of us should be doing, right? Like that, improve our cash flows so we can have something we can save. Now, once that something is saved, it's a tragedy that we can't just have that there, right? Just have it and count on it. Count on it, not just now in the next 6 months, because ultimately that's what most people's cash balance in their bank account is good for. They're keeping it there for their emergency fund, right? Beyond that, then you have to go and find something to do with that. It's not just storing it. It's not just sitting it there. You have to go and put it at risk, right? And investment is become a weird thing where there is no savings anymore. There's nowhere to save, right? There is only short-term cash balance and investment. And investment should be something that you're making purposeful decisions about, that you think is an opportunity that you want to put your hard-earned savings to work for, to make that opportunity happen with this business that you believe in. But in reality, most of us just dump it into someone else's, some other account, and ends up in index funds or something like that. And we're trusting someone else to make those investment decisions for us. And if you want to be really good at it, maybe you have a second job, learning about investments. Like, that tragedy is a crucial thing. The ability to store that value over time has so many consequences if you have it, right? Like, people talk about Bitcoin as a hedge to inflation. It's not really a short-term hedge in that it's actually correlated to inflation in any particular way most of the time. But it is in the long run, as people adopt it as money, it's ultimately the solution to inflation. It is money that is not being debased over time, right? It is the savings account that we don't have. It is the thing that can hold value over time. And that changes everything, right? It means people working 9-to-5 every day have an opportunity to simply store their value and not put it at risk. And again, we know that it's volatile. I know that's an argument against what I've just said, but we have an emerging asset that over any 4-year period has outperformed everything. And that savings vehicle is ultimately what the world needs. We need to be able to make purposeful decisions about where our value goes.
I think, and that's a great point, Brandon. And I think as well, it's important to look at what saving and investing really are. Prior to, let's say, 1971, when the fiat sort of standard took over and monetary inflation really started, or inflation of the money supply really started to take off unabated, you would be able to save for your kids' education or save for your retirement by putting money in the bank and getting a reasonable interest rate for it. You could count on the value of that money retaining some similar purchasing power at the time you went to access it. Bitcoin flips that entirely on its ear. There's less of it available over time rather than more of it, which is the current financial system. And so its purchasing power increases over time. And so if you save in Bitcoin, your purchasing power increases over time, even though, yes, there is, as Brandon says, some short-term volatility. I would go to pains to point out that 80% of Bitcoin's volatility is in the upwards direction. And so, 4 times out of 5, when you go to check your Bitcoin balance, it's going to be higher in its dollar-denominated version than it was the last time you looked. So this is what we see in Lightning Pay a lot, is that now that people can move in and out of the fiat financial system really fast with no kind of downside, like if you want to go from your pay packet into Bitcoin, you can do that in the time that I showed you, just now, in terms of going from fiat to spendable Bitcoin. And you can go back in the same direction, and you can pay bills through Lightning Pay. We enable people to pay bills with Bitcoin. So if you want to live more on a Bitcoin standard with Lightning Pay, you can keep, 1 foot further into the Bitcoin space than you were able to before we kind of enabled this sort of transition. And so we see this a lot. People are putting a lot of their kind of earned money into Bitcoin and sending it back to fiat when they need to cover whatever costs it is, because we enable that to move so fast. So what we see, especially in the year that we have been operating, is that the people who are saving in Bitcoin are now far ahead of the people who stayed in fiat, because we've gone from $16,000 per Bitcoin to 100 and something USD.
Yeah. Cool. All right. So we'll finish up on this one. I witnessed firsthand that Lightning Pay NZ won, or I witnessed you guys winning the Web3 Startup of the Year last year. So congratulations on that. Why don't you just finish up and just tell us a little bit about what's happening in the next 1 to 5 years, and then 5 years and beyond with the business?
We are really working hard to be positioned for when the entire world economy works on Bitcoin infrastructure. We're having incredible discussions with people around the world at incredible levels and doing incredible things, who are all looking at the world where banks migrate to something like a Lightning-based system. So they either evaporate entirely, or they migrate to being on Bitcoin and having dollars and stuff on Bitcoin. So when everybody is their own bank, the question becomes like, who provides the banking services? And that's what we're positioned to be. So when you've got your own money stored on your hardware wallet, your phone, and you're spending it the way you want to, we want to be able to provide the useful services that you would have expected that would have come from banks, whether that's things like term investments, or whether it's things like access to different types of exchange, or shifting money around, or moving between different sorts of services, multi-sig recovery stuff, all that kind of stuff. Those are the sorts of services that we look to add over time. So we want to provide infrastructure that allows people to live on a Bitcoin standard.
Is it fair to say that in the future, Lightning Pay NZ effectively is not becoming a bank as in the current definition of what a bank is here in New Zealand, especially legally, but in terms of its function, like what it's doing? Effectively, you're building up a bank, aren't you? You're building a bank from the ground up.
Yes, that's the thing that I say all the time, is like what we're trying to do is ultimately build the services. Like as people come on board with Bitcoin through Lightning Pay or whatever means they're doing, they are saving in Bitcoin. Ultimately, they need to spend it. Ultimately, they need, when they have an asset like that, they might need a loan against it. They need financial services. And ultimately, what we're building is a bank, but importantly, one that's emergent in the Bitcoin economy and provides new services that potentially don't exist, but also never holds anyone's money, ideally. We don't actually, in all the services we provide now, it passes through our services, and we follow your directions, but ultimately you have it on one end and someone else might have it on the other, or you have it in a different form on the other end, right? And that's what we are. We're a software company providing financial services, ultimately providing the kind of financial services that a bank would provide, but we don't have your money. You have it.
That's cool. Awesome. Any parting words of wisdom before I let either one of you three people go?
Yeah, I'd like to just talk about, the future of Lightning Pay is looking awesome, but the actual future of the Lightning Network, some of the use cases that it enables are kind of mind-blowing. The things that, when you come to a news article you want to read and it's like subscribe for $15 a month, you're like, oh, I'm not going to do that. Imagine being able to pay 10 cents in Lightning right there and then click a button in your browser. Yeah, just pay it. Bang. There you go. You can read it. How many people would do that? What about you get like a self-driving car, has its own Lightning wallet. It accepts Lightning payments for rides. It goes wrong. It charges itself by paying Lightning at the charging station with an automatic plug-in. It detects something's wrong with it with its sensors. It calls a mechanic out who fixes it. And when the sensor starts working, it pays the mechanic and Lightning. I think that the potential for machine-to-machine payments is something we've really not anticipated. This is a bearer asset. The machine could have its own wallet. It pays for services with other machines. It's just the kind of things that we could see from the Lightning Network in particular. The use cases just you just wouldn't believe. I think it's going to be incredible. The future.
I like that. Yeah, that's good. Yeah, it's funny. Yeah, like again, Bitcoin shows you what it really is over time, and that's yes. Oh man, now my mind's going on that one. Okay.
Yeah, there we go. Because of course, a machine can't get a bank account, right? So it can't use fiat currency because it's not a legal entity. It doesn't have a driver's license to KYC, even though it's a car. But all of these kinds of things are alleviated by micropayments on Lightning. Think about an AI that wants to train itself by reading paywalled articles, as Rob says. Then it can send the New York Times a 10-cent transaction fee to be able to scrape that content.
Yeah.
NYT gets its share.
Yeah.
The AI gets that training data, all those kinds of things. Because, when machines aren't legal entities, it can't use legal tender. So it has to find another way to do it. So the scalability of the Lightning Network is kind of potentially driven by an entirely new kind of customer, which is just a machine that needs something done.
That's cool. If you're not optimistic about the future,
you're watching a film. Oh, sorry, I was going to say you're watching a film and you're paying by the minute, and as soon as you get bored with the film, you turn it off. They stop getting paid rather than just paying for the whole thing outright. So you'd have to make a pretty good story end to end to keep those Lightning customers entertained.
I'm not even gonna use the analogy that I just baked up there. Okay, no, that's cool.
But I guess it's a driver for you as a podcaster, right? To keep the quality and everything up. Probably by having Lightning Pay on again, but somewhere we're streaming you sats to keep the quality, and again, when they turn off, you stop getting paid. Well, doesn't that drive better content overall? Because
that's right.
Incentivized to keep people on for as long as possible.
Where's the best place to go for people to kind of follow? I had a quick look on the Lightning Pay NZ website. A lot of really good articles on there, by the way, well written. Where's that? Like, is there a newsletter that you guys do? What's the best place for people to kind of follow the work of Lightning Pay NZ?
That's right. Well, first thing to do is to sign up to Lightning Pay and get an account. Sign up to the mailing list, which we have. We send out great and informative newsletters. We're not very spammy with that. We only tend to email people when we've got something specific to share. We are on Twitter at LightningPayNZ, or X, at LightningPayNZ.
Okay. All good, guys. All right. Well, thank you very much. Keep on doing good things, and thanks for having
me today.
Appreciate it.
Thank you very much so much.
Thanks for tuning in to the Everyday Investor Podcast. If you enjoyed what you heard and you want more, check out the Everyday Investor with Darcy Ungaro on YouTube. Follow me on all the socials and check out some of the online courses, sign up to the free fortnightly newsletter, and more. All the links are right there in the show notes. As I leave you, remember, some investments or strategies discussed here may result in financial loss. Always do your own research and seek qualified advice if you can before making any investment decisions. See you next week.
Over, no ribbon throbbing, it's gone. I wanted toast, she decided to post suntan lotion while we're burning the coast. Yeah, whoa. Yeah, whoa. They'd like it clear to the river while praying to mountains. Earthquakes quiver the mounds for shouting. Blame's a game. You're drinking Lucifer's gin, throwing knives at the board while the wives sit grinning. Yeah, whoa. Yeah, whoa. 16,000 nights, what's left for our kin? Half a lifetime paying for their sins. The beat goes on, but the rhythm is wrong. We're dancing in chains to the same old song. The beat goes on, but this won't last long. The temper's too high, it's ready to blow. To complain, check both ways and they call you insane. Not knowing his name, he was there all along. when Jagger was right. He cried the night long. Yeah, okay. Yeah, maybe not. Putting on our best show while the cracks start to grow. Ignoring warnings till regret turns to mourning. Finger pointing at teams while they're stacking their schemes. The John Goat line hoisted up by the seams. 16,000 nights, what's left for our kin? Half a lifetime paying for their sins. The beat goes on, but the river is wrong. We're dancing in chase to the same old song. The beat goes on, but this won't last long. The temper's too high, it's ready to blow. They'll say it's not a game, but they're holding the dice. Keep them spinning on boards while they scorn our advice. Mountains rise from quakes, they can't silence the shouts. The rhythm might be set, but we'll find our own routes. The beat goes on, but not for long. The beat goes on, but this is wrong.